I was just talking about how politics seems to be less of an irritant for the market today. You've noticed, and as we have all, that news barely drove the markets last year, even with all the noise from the Trump administration. But this year, it seems to be taking hold more. Right. Why do you think that is?
Well, I just think the market is much more vulnerable this year in general than it was a year ago. The valuations are a lot higher. Financial liquidity has been contracting now in the last 9 months. We came into the year with really some of the most excessive optimism we've had on things for a while, too bullish, if you will. We're facing regular increases in the short-term Fed funds rate and also now this year a rise across the curve, including the 10-year. We got inflation concerns that are escalating. And I just think that makes a vulnerable stock market. One a year ago where we had basically the same news. The president would tweet every morning. We had Fed meeting news and the like. Didn't do anything. But this year with vulnerabilities, that news takes on much greater impact, at least for daily volatility. And we continue to see that just in the last couple weeks.
Yeah, I've just been looking at some of the price action that we've seen in the S&P. We were just pulling up the chart there, and I was just looking at the failure to break above the unchanged level, the break-even level on the year, actually. 26.72, just above that, is where we seem to keep coming up to and then failing to break above. Jim, just in terms of the sort of sentiment in the market here, do we need a strong earnings season now to allow us to break above? Because to all the points you've just been mentioning and the sensitivity for investors right now, even the technicals here seem to matter.
I think the technicals are the biggest thing in the room yet. Ever since that February bottom, the technicals have been very dominant day in and day out. And, we really haven't been able to establish that we're going to necessarily break below those February lows, but nor have we established that we have clearly retested and now the water is safe. We're headed to new highs. And certainly we're kind of stuck there between the February lows and that year-to-date unchanged marker here. And at some point, we're either going to have a more serious challenge in those lows or we're going to break finally up above 2,800 in the S&P and challenge the old highs. But right now, those technical boundaries continue to dominate things. I don't know if it'll be earnings. There's so much impression on Wall Street that earnings is what'll save us and they'll return mojo to the market again. I'm less convinced. I very much agree that earnings are going to be spectacular. It's just that I think that there's reasons to believe that the earnings beta on this stock market, that is how positive it'll respond to good earnings, might be quite muted. If nothing else, we sort of paid ourselves last year for the earnings that are now coming this year, and maybe we've already been paid for the earnings that are going to come out.